Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda. A 25% tariff on all US imports of steel and aluminium. President Trump widens his trade salvo, threatening ties with some of America's top trade partners. The dollar gains while Asian stocks sell off. Germany's election face-off. No knockout blow in the first TV debate of the country's snap election. We'll bring you the latest live from Berlin. Plus, Bloomberg learns activist investor Elliott has built a significant stake in BP, a potential first step to force change at the struggling British oil giant. Well, a very good morning. Happy Monday. And today appears to be the week that Donald Trump's trade wars touch every corner of the globe. The US president already having announced over the weekend that he's going to bring 25% tariffs on steel and aluminium imports. And yet, equity futures on both sides of the Atlantic are higher. Do we see a bit of tariff fatigue here? If we flip the board over to the cross-asset picture, you can see more of a read through from this tariff story. You've got the dollar advancing against most major currencies this morning, reflecting these inflation fears, a rush to the reserve currency, and those same inflation fears keeping the 10-year yield elevated. So we're currently at 4.48%, ahead of this 10 and 30-year Treasury auctions this week, and of course Chair Powell's testimony to Congress as well. That tariff news also pushing gold to a record high, again a haven bid, and giving oil a boost after a string of weekly declines. So we're at $75 a barrel currently, up 0.6%. Let's just also have a look at Asian markets. We've got the MSCI Asia Pacific Index currently weaker, 0.25%, down for the first time in a week. So again, you are seeing investors shunning risk in terms of Asian equities. But the Hang Seng Tech Index bucking the trend, higher 2.25%. This wave of optimism about artificial intelligence. And the tech index, in fact, at its highest since October on an intraday basis. The yen, as I say, weaker on the flip side of dollar strength, and iron ore up. China, of course, the world's biggest importer of the metal. Beijing stimulus to offset tariffs. That could support demand for steel and therefore aid iron ore. Iron ore actually slipping into the red there, down 0.1%. But let's dig into the tariff story more deeply now. President Trump saying that he's going to impose a 25% tariff on steel and aluminium. That's an announcement that he made just as he was speaking to reporters aboard Air Force One. Take a listen.
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum, too.
10%?
25%.
25 for aluminum as well?
25 for both.
Well, for more, let's bring in Bloomberg's opening trade anchor, Kriti Gupta. So, Kriti, universal tariffs on steel and aluminium, who does that affect most?
I mean, it affects the United States pretty significantly, given that although the U.S. makes and exports a lot of different kind of metals and commodities, steel is not one of them. It's been a major dependent story out of the likes of China, out of Russia, even out of Japan as well. And this really harps on a domestic issue, which is, of course, the acquisition of U.S. Steel, which has been a very big, struggling company back in the good old days in the 40s and the 50s. This is a company that used to actually build the steel that kind of created Manhattan skyscrapers that helped with the war effort in Europe. It has since really gone into decline in a very, very big way, attracting attention from international players, in addition to really not having the capacity to build up steel. These are the things domestically that Donald Trump is trying to address with the international aluminum and steel tariffs. It also helps, by the way, in terms of raw materials getting to American car makers as well. So that's the domestic thinking behind all this. But we should keep in mind that all this is also very much a China-focused move, in that China is the biggest manufacturer of steel at the moment. They do so at a fraction of the cost to all of its competitors, including Russia, including Japan, which are the second and third largest creators of steel as well. So this is really harping on the idea that this is an additional tariff and trade war component specifically garnered to China.
Okay, and interesting as you say that U.S. steel remains U.S. steel, not Japanese steel for now. Meanwhile, of course, we need to talk about the U.S.-Russia relationship. Lots of speculation about whether Putin and Trump have had a call, who may have called whom. What do you read into the statements from the offices on both sides?
Yeah, it's fascinating because on Air Force One, Donald Trump himself, this doesn't come from a spokesperson, said in that very same phone call that you kind of played there that they had a talk with the Kremlin. Now, the Kremlin spokesperson, on the other hand, saying that he himself is not aware of any sort of phone calls, but that he may not be privy to that kind of information. So we don't actually even know if this phone call, at least from the Russian side, has been fully briefed within the government itself. But we do know that we are about 4 days away from the start of the Munich Security Conference. We also know this is where rumor has it that, of course, Keith Kellogg, one of the major kind of envoys to Europe, is going to show up. Donald Trump may or may not be in attendance. That's still unknown, to potentially put forth a plan on peace in Ukraine. And that's something that he's campaigned on in the United States ahead of his presidency, and certainly something he's talked about creating a plan with. So this might be one step towards that ultimate goal and news flow that we get later this week.
Okay, really interesting, and we'll have full coverage of that. But then, of course, we also have had the president saying that Elon Musk's government efficiency teams found irregularities at the Treasury. What does that mean?
Yeah, I think your guess is as good as mine on that one. It's a tricky one, specifically because we also know that Scott Bessent, who actually spoke to Bloomberg TV and radio last week, specifically said that this is really just a handful of people trying to understand where the inefficiencies lie. So this isn't actually necessarily new information that we're getting from Elon Musk, from Donald Trump, or others. The big concern around this was simply, does Elon Musk and his colleagues in that kind of consulting role have access to private payments information, or have access to the actual fundamental system that holds not just the American economy up, but the payment system up internationally? And that's something that Scott Bessent last week had said that's not really what's happening. But in terms of finding irregularities, this is coming down to this kind of government efficiency story. What do the irregularities mean? He's also made comments that he's issued the Treasury to get rid of the likes of pennies, for example, that 1 cent, creating those 1 cent pennies actually cost 2 cents. This is very common in terms of every smallest currency everywhere around the world is always going to be more expensive to make than it is to actually earn. But these are the kind of tiny inefficiencies that he's talking about. We are still waiting on what those details actually look like. But what we do know is that Elon Musk and his colleagues are collaborating and participating and certainly evaluating what's going on at the Treasury.
Okay, Kriti Gupta, we thank you. And Kriti will be back in just under an hour's time with the opening trade. But Kriti, we thank you for now. Well, let's dive more deeply into how markets are reacting to those Trump tariff announcements. Valerie Teitel joins me now. Val, what the market's saying?
Look, we're having some FX volatility this morning, Lizzie. It's not the kind of craziness we saw in the market last week, but we are seeing the Canadian dollar weaken off the back of these tariff announcements from Trump just yesterday in this Air Force One interview to the press. The Canadian dollar is weakening, and that is just because that the U.S. imports around 25% of its steel from Canada. If we flip on and show this next graphic, Canada is vulnerable to these tariffs, but also Mexico and Brazil. So keep an eye on those Latin American currencies possibly weakening off the back of these tariffs announcements. But lastly, the most important thing I think we heard from that interview on Air Force One is that he is still eyeing reciprocal tariffs and says the announcement for those could come as early as Tuesday or Wednesday. So watch out for how U.S. assets react to that kind of news. On Friday, there was a big slide in the equity market and a big slide in the Treasury market on those threats of reciprocal tariffs from Donald Trump.
And Val, of course, we got the U.S. jobs report back on Friday ahead of Chair Powell's testimony this week. Was it good news? Was it bad news? Was it just another excuse for the Fed to sit on its hands until they know more about Trump policy?
Yeah, that's right, Lizzie. It was kind of a mixed picture from Friday's non-farm payroll report. One thing that did jump out to the markets, though, was the University of Michigan consumer sentiment data. There was an unexpected jump in the year-ahead inflation expectations, rising a percentage point, Lizzie, from 3.3% to 4.4%, the highest since November 2023. We do get hard data, though, on inflation this week. We have the consumer price index on Wednesday, followed by the producer price index on Thursday.
OK, Valerie Teitel, we thank you very much. And now to some breaking news out of Nokia, which has announced a change at the top. It's going to have a new CEO. The CEO, Pekka Lundmark, has informed the board that he's going to step down. They've appointed Justin Hotard as the next CEO, and he's going to start in his new role as of April the 1st. You can see the share moves so far there for Nokia over the past year. So a story that we shall keep an eye on through the morning. But let's get to German politics now. Chancellor Olaf Scholz struggling to land a decisive blow. He urgently needs one, though, as the frontrunner in the German snap election, Friedrich Merz, stood head-to-head with him in yesterday's TV election debate, just 2 weeks ahead of the vote. Now, in the 90-minute duel, both candidates detailed their strategies for dealing with the unpredictability of US President Donald Trump. We can get analysis now with Bloomberg's Oliver Crook, who joins us from Berlin. Ollie, what were the focus points here, and who won? The big question.
Yeah, so Lizzie, I mean, listen, these are two candidates that are not necessarily known for being the most exciting, the best communicators, the most charismatic people on the planet. So I have to say, at certain points, it was a little bit slow. But really what it really kicked off on was one of the main debates here in Germany, which is the question of immigration, which is where Friedrich Merz wanted to land a lot of blows on Olaf Scholz, who had actually been improving and sort of had a lot more data to support that actually there have been fewer people coming into Germany. But again, it quickly moved to this question of the AfD, the Alternative for Deutschland, the far right. For the first time in German history, you know, the CDU voted with the AfD a couple of weeks ago, and this was really the focus point for Olaf Scholz, saying that basically Friedrich Merz would be willing to enter into coalition with the AfD. This is something that Merz really very powerfully sort of rejected, saying that this was not a cooperation, that there actually is no overlap between the AfD and the CDU. They went on to talk about a number of other things. I'll just give you a couple of the highlights. One of the points was the debt brake, and that was really centered around defense spending. Will basically Germany be able to meet the defense obligations, the tens of billions of euros that they need to spend in order to get their defense and their military up to where it needs to be? Olaf Scholz says basically you cannot do this with the debt brake in place, and Friedrich Merz and the CDU have really been sticking to the debt brake. It went into their manifesto, but here in the debate, Friedrich Merz did say that they'd be willing potentially to look at loosening the debt brake, particularly on this question of defense, particularly because there is somebody on the planet, Lizzie, that is asking for 5% defense spend here in Germany and across Europe. That is, of course, Donald Trump. Have a listen to what Olaf Scholz had to say about how he would deal with Donald Trump.
We should not delude ourselves. What the American president says, he also means. And some people are quite light-footed and say it won't turn out that way, which is why I think it was important that I was the first head of government in Europe to say after the discussion about Greenland, this is not how it works. We are defending Ukraine because we say that borders must not be moved by force. But of course, that applies all the more to our partners.
Recht für unsere Partner, die dürfen das auch nicht machen.
So, of course, despite the fact that this is the election in Germany within 2 weeks, something that we just cannot avoid basically anywhere on the planet, certainly here in Europe, is the Donald Trump presidency, and something that is going to be a large focus for the Germans, particularly with all of these questions around tariffs as Germany faces down what could be a third year of contraction.
Yeah, and I mean, that was Scholz, but what's Merz's plan to take on Donald Trump? And more importantly, maybe, how are the polls evolving?
Yeah, so listen, Lizzie, let's deal first with the Merz plan here. I mean, I think it's very interesting because, you know, I mean, this is Scholz that has dealt with Trump in the past. We know that there is not a great deal of love lost between the Trump administration, between Elon Musk and the SPD and Germany here. The question is about how basically would Friedrich Merz stepping into this role deal with Donald Trump? And I think this is actually quite interesting. Have a listen to what Merz had to say. I guess we don't have the soundbite there. Basically, I'll try to summarize it for you. But basically, what he's saying is that Donald Trump's predictability he's predictably unpredictable, basically, and that what basically Merz is calling for now. And this is really interesting in the context of talking about the AfD and whether or not the CDU is aligned with them. What he's calling for is a much more pro-European approach. That is to say, a much more collective action among the European powers. That is to say that basically you want the CDU, that Germany wants to see a stronger Europe, a more unified Europe, and that is basically what Merz is saying. And for the viewers over in the UK, he's even opening the door and saying that we need actually a closer relationship with Britain, that this is going to be part of the tactic, and this is part of what the Europeans need to do in order to fight against Donald Trump in the moments when you need to sort of stand up to him. As far as the polls are concerned, we have to say the CDU has dropped basically 1 point. But I have to say, Lizzie, I've been pretty shocked that despite the fact that you've had a lot of fireworks, you had this voting with the AfD by the CDU, the polls have not moved a whole lot. You still have the CDU in the commanding position of about 30%. AfD there at 21% in the second place. So listen, as we go in, there's still some blows to land. I would say that next weekend will be the most interesting one because you will have the 4 main candidates debating, including the AfD, the first time that they've ever taken that stage with a chancellor candidate.
Okay. Ollie, your Merz impression's better than mine. We thank you as we look ahead to that next TV
that's
debate.
True, that's a compliment.
Oliver Crook. In Berlin, we thank you. Now, let's take you through some of the events we'll be watching over the week ahead. Over the next 2 days, of course, we're going to be live from the AI Action Summit in Paris. Some of the world's key leaders on artificial intelligence gathering there. We'll bring you interviews with guests, including the co-founder of Mistral AI, the French finance minister, and OpenAI's head of policy and more. So plenty to watch there. Of course, the emphasis, interestingly, more on action than safety. And France expected to announce more than €1 billion of investment in AI projects. Macron's own Stargate, as he frames it. So definitely one to watch. Then to the macro, on Wednesday, we have Fed Chair Jay Powell giving his semi-annual marathon 2-day testimony to the Senate Banking Committee. The latest US CPI data giving us an interlude in the middle. And as Valerie Teitel was telling us, the expectation being that Powell's going to highlight the resilience in the economy as a reason that the Fed can wait to cut rates more and really digest the impact of Trump's policies before acting further. And then on Friday, on the geopolitical front, we head to Munich for the security conference. The focus there, of course, the war in Ukraine. But coming up, Elliott takes a significant stake in BP as it looks to shake up the struggling oil major. We'll bring you all the details next. This is Bloomberg. Welcome back. Now, Bloomberg has learned that activist investor Elliott Management has built a significant stake in British oil major BP. Sources say Elliott wants to boost value by pushing the energy giant to consider transformative measures. We can get more detail now with Bloomberg's Anthony Di Paola. Anthony, good morning. Notably, over the past 5 years, BP is down about 8%. Rivals like Shell are up, I think, about at least 30%. Is this the crunch point? How significant is this?
Yeah, BP has seemed to be at a crunch point for a while. It's kind of harkens back to the battle days of the Deepwater Horizon explosion and the rig leak in the Gulf of Mexico around 2010. At that time, BP was considered a target because the market cap had simply just crashed. And the unthinkable came out that someone could go ahead and buy BP. So now with this lagging share price, it looks like they potentially could be a target again. So there is some speculation in the market on that. We haven't heard anything concrete about that. But of course, Elliott is looking at that weak performance, really kind of a lack of vision for how the company is going to proceed forward. Remember, we do have a newish CEO in there who hasn't really put his stamp on the company yet or announced his own strategy. So that kind of lack of an idea of how we're going to be moving forward and dealing with this desire on some of these companies to be a little bit greener. But really what the shareholders seem to want is they want those returns, and those returns at the moment are still coming from oil, Lindsay.
And knowing what you know about BP and knowing the Elliott playbook, what's next?
Yeah, well, they're going to push for some changes there. As we said, we've got this newish CEO coming in. They've got a strategy meeting coming up at the end of this month. And there's going to be a lot of focus on that, about what the new CEO, Murray Auchincloss, is going to propose in terms of a change from his predecessor, Bernard Looney. Looney set up that plan of kind of getting the company more into this green area, cleaning it up, quote unquote, if you will, in terms of the emissions. But the shareholders never really approved of that kind of approach. We've seen that also take place with Shell, with the new CEO there, while Salwan has kind of pulled back from some of the green pledges there, and they're focusing more on an investment in the upstream. Shell has a big position in natural gas, so they focused on that. And we've seen the difference between the shares of BP, Shell, some of the other European competitors, with those U.S. competitors who have done much better, focusing most of the time on oil and gas, some carbon capture. We've got, of course, the drill, baby, drill mantra back now with Trump in the United States. But those companies have really been doing that anyway. So we're seeing really the difference between those two strategies, and what the investors are looking for, and what this activist investor Elliott is potentially going to be pushing for as well, trying to see that new strategy coming out of BP, Lizzie.
OK, so potentially an opportunity to close that gap in big oil. Bloomberg's Anthony DePaola, we thank you for the latest on that Bloomberg scoop. And we're going to stay with the energy theme in just a moment. After a bumper 2024, we're going to take a look at whether the sun will keep shining on solar power this year. All the details next. This is Bloomberg. Welcome back. And we do like to start the week sunnily here on Bloomberg Daybreak Europe. So let's talk a bit of solar power. It had a bright year in 2024. Lower costs, government targets and growing AI demand all helping solar to become the largest source of new capacity in global electricity grids last year. So what's in store this year? Laura Hyam, who is head of Bloomberg NEF solar team, joins me now. Laura, how much solar was actually added in 2024? What's driving these installations?
So we estimate that there was about 600 gigawatts of solar installed last year. And that's about a 35% increase compared to the previous year. To put that into context, that makes solar the largest new capacity and generation for electricity back in 2024. In terms of what's driving the installation, solar is now the cheapest source of electricity in majority of the world economies. And we're now coming to a stage where generating electricity from new solar plants is becoming cheaper than running your old gas and coal plants.
But if it's cheaper, what does that mean for manufacturers?
One of the reasons why solar got so competitive so quickly is because of the panel price declines that we've seen in the past few years. Since the beginning of 2023, we've seen about a 60% decline in the panel prices. So at the beginning of 2023, we were looking at 24 cents per watt. Now we're down to $9 cents per watt. In terms of what that means for manufacturers, it's been a very tough few years for these companies. And that is mainly because there's been overinvestment in manufacturing capacity, particularly in China. So we currently estimate that the manufacturing capacity is double that of the demand for these products. And these manufacturers have been selling their products either at production cost or below production cost. So that's meant that they've accumulated billions of pounds of losses.
But then, given that the market's been growing so quickly, when do we expect that supply-demand imbalance to kind of correct itself?
So, yeah, the market has been growing. As I mentioned, last year we saw 35% increase. 2 years ago, off the back of the energy crisis, we saw 75% increase. We estimate this year it's going to be around 15%. So the growth is actually slowing down. When you look out to 2035, our estimates show that the market's only going to grow about 4% average annual growth rate. So that means that demand growth alone is not going to be enough to address the supply-demand imbalance because the oversupply in the market is quite severe at the moment.
OK, Laura Hyam, thanks for bringing us the latest. Head of Bloomberg NEF Solar Team, lovely to have you. And coming up on the programme, President Trump's tariff threats have triggered turmoil and uncertainty in global markets. Swiss Re's chief economist for Europe joins us next to discuss the impact on growth and inflation. Stay with us for that conversation. It's coming up next. This is Bloomberg. A very good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda. A 25% tariff on all US imports of steel and aluminium. President Trump widens his trade salvo, threatening ties with some of America's top trade partners. The dollar gains while Asian stocks sell off. Germany's election face-off. No knockout blow in the first TV debate of the country's snap election. We'll be live in Berlin with the latest. Plus, Bloomberg learns activist investor Elliott has built a significant stake in BP, a potential first step to force change at the struggling BP oil giant. Well, those are your headlines this morning. Let's get a check on these markets because we've actually got futures pointing higher on both sides of the pond. Despite the latest in the Trump trade war, it looks like this is the week that it will touch every corner of the globe. The president announcing he's going to have tariffs on steel and aluminium imports. 25% is the number. So is this a bit of tariff fatigue that we're seeing? Are investors actually open to the idea that Friday's sell-off was overdone? That's what the equity picture suggests. But if we flip over to the cross-asset picture, you can see more of a read-through from the tariff news. So you've got the dollar advancing against its major peers, reflecting the inflation fears, a rush to the reserve currency, and those same inflation fears fueling the 10-year yield, elevated still at 4.48% ahead of those auctions of 10 and 30-year treasuries this week. We also, of course, have Fed Chair Powell's testimony to Congress coming, and we have the tariff news also pushing gold to a record high. So, again, a haven bid. $2,884 an ounce is where we are at the moment. Oil at $75 a barrel. So, after a string of weekly declines, actually up 0.6% this morning. And then if we flip over to the Asian picture, we've actually got the MSCI Asia Pacific Index down for the first time in a week. So again, you are seeing investors shunning risk here, at least in terms of Asian equities, but not so for the Hang Seng Tech Index. Here's the bright spot. It's a wave of optimism about AI, pushing that tech index to its highest since October on an intraday basis. The yen weaker, as I say, on the back of the dollar strength, and iron ore up as well. China, of course, the world's biggest importer of the metal, and maybe we'll see Beijing stimulus offsetting tariffs, supporting demand for steel, and therefore aiding iron ore. But let's get more into the tariff story. President Trump planning to impose 25% tariffs on all imports of steel and aluminium, and China's retaliatory tariffs also taking effect. The economic disruption really looking set to intensify. Well, Swiss Re's European chief economist says the tariffs on China are more durable and come with a significant risk of being escalated with time. And we can speak to Charlotte Mueller now. She joins me on Daybreak. Good to see you, Charlotte. A very good morning. There's been this onslaught of news since you were last with us on Bloomberg TV. It feels like the norm, though, with Trump back in the White House. So let me start by asking you, has your outlook changed since we last spoke?
Good morning, Lizzie. So I would say our baseline forecasts for growth, inflation, interest rates are largely unchanged from a month ago. But of course, there have been a lot of new headlines with regards to tariffs. And there I'd also stress the uncertainty around it. I think if we want to look at the implications of tariffs for the real economy, we need to also dissect the tariffs in terms of the negotiating approach, so more the how, and then also the policy aims. And I would filter them into four key buckets. The first is, are tariffs used for more a transactional manner, like we saw last week with Canada and Mexico, that you try to swap in or use tariffs, for example, for other foreign policy aims. Number two is if tariffs are used for more addressing the trade deficit concern. So that is where, for example, Europe could be more of a target, along with, of course, China. And then the third area is more from a geopolitical perspective. So using tariffs to potentially also encourage production more domestically in the US. And then finally, the fourth point is to use tariffs for revenue, for example, for fiscal policy later on. And depending on the type or the bucket where this is in, this will also determine the likelihood or the impact of tariffs or how durable they are. So to your question on China, there I think they fit more into the third category and the second category. And there I think the Chinese tariffs will be more durable. And like we saw today, risk of also being further escalated.
But when you add up those buckets, Charlotte, how are you thinking about, how are you modelling the impact on US growth?
So I'd say there for US growth, we look at it both in terms of the direct impact and then also the indirect impact. So the direct impact is also just generally economic growth being hurt with also lower or more expensive goods that then also can hurt demand. On the other hand, if you look also at the inflation perspective, that is also going to be quite balanced too, I would say. So you could have an equal amount of impact on growth as it is on inflation. And there we have, if we look at our kind of scenario analysis of like a severe trade war, you could have growth, for example, hurt by 1 full percentage point, and also inflation being added up by a full percentage point. In Europe, I would say the impact is more asymmetrical, and there you would have a greater impact on growth. So the demand shock would be greater than the inflation shock. It all depends, of course, on retaliation measures too.
Yeah, of course. And we can come back to Europe. But just in terms of where that leaves the Fed then, of course, we're going to hear from Jay Powell this week. But do you still see the Fed's next move being a cut?
So we see, I mean, for now, we expect the Fed to stay on pause and the next move likely still to be a cut, but that it would come earliest, I would say, at the end of maybe the end of the second quarter, so around June at the earliest. I think what's key with the Fed is it has shifted from being in data dependency mode to policy dependency mode. And I would say that's also quite a kind of risky strategy in general, just especially if you think about how tariffs can also be used, as I mentioned in my 4 buckets before, for also a way to potentially create confusion or threaten opponents, which will then make policy making for the Fed much more challenging also.
Policy dependent, not data dependent. I wonder whether Powell will admit that when he's in Congress this week.
Probably not.
But if we just think about if we think about the flip side then for European central banking and how the ECB will respond to the growth threat from Trump tariffs, do you think that they'll cut beyond neutral? Will terminal be below neutral?
Yeah, so we had on Friday also the updated estimates of the neutral rate with the midpoint pushed down to 2%. I would say neutral doesn't mean that that has to be the terminal rate. And my view is that the ECB can also cut beyond that and further below. We have 1.75% for the depot rate at the end of this year, with risks skewed to also further rate cuts. I would say if you look at that, what underpins the view is growth still staying weak, risks of inflation also undershooting, especially if the demand shock is greater than with regards to tariffs. The only offsetting factor could be potentially greater fiscal policy coming if we do see movement after the German election, but I don't think that's a story for 2025.
Okay, and very briefly, how lives march for the BOE?
So I think the BOE there's definitely, we expect them one more rate cut to come in March. Of course, again, depends always on the inflation backdrop. But I would say relative to the ECB, we don't expect as many rate cuts in the UK versus the ECB, especially with their greater fiscal spending in the UK.
OK, but possibly slipping out of that quarterly cadence of cuts. Charlotte Mueller, very interesting, our European chief economist over at Swiss Re. We thank you for those insights. Now, to some other stories making news this morning. Shein is said to be offering incentives for top apparel suppliers in China to open new production lines in Vietnam as a way to reduce the impact of President Trump's tariffs. We're told the fast fashion giant is offering up to 30% higher procurement prices, as well as to help to build facilities. A Shein spokesperson confirmed plans to add capacity in Vietnam without elaborating. While Shein has set up supply lines in Brazil and Turkey, the bulk of its operation does remain in mainland China. And former Credit Suisse chief executive Tidjane Thiam has given his French citizenship up as he prepares to run in the Ivory Coast's presidential elections. One of the conditions to qualify as a presidential candidate in exclusive Ivorian citizenship. The former banker still needs to win the Democratic Party's primaries to stand in the October election. And France is set to announce €109 billion in investment in artificial intelligence projects by companies, funds and other sources over the coming years. Speaking on the eve of a two-day AI summit, President Emmanuel Macron also referenced an investment by a fund from the UAE of between €30 and €50 billion in a data centre campus. Over the next 2 days, we'll be live from the AI Action Summit in Paris, where some of the world's key leaders on artificial intelligence are gathering. We're going to be bringing you interviews with guests, including the co-founder of Mistral AI, the French finance minister, and OpenAI's head of policy as well. So plenty of coverage from our very own Tom McKenzie on the ground in France. But US President Donald Trump's tariffs have really fired up volatility in the $7.5 trillion a day currency trading market, and that's left banks and hedge funds scrambling to rebuild their long-neglected FX teams. It's something that our Bloomberg FX and rates reporter Alice Atkins has been watching closely, and Alice joins me now. Alice, good morning.
Good morning, Lizzie.
Just talk us through how Trump's tariff announcements are impacting currency announcements. We talked about how the dollar's up, but you've been in the weeds of all these moves.
Well, Lizzie, it's a good time to be an FX trader. Yeah. There's a lot of focus on FX markets, given they tend to be the first to react to this sort of geopolitical news, and we're seeing the dollar stronger this morning. In recent weeks, we've seen some big intraday moves in the Canadian dollar and the Mexican peso. So there's been a lot more volatility, and it's stacking up to be a much busier time in terms of FX trading volumes. Hedge funds have been increasing their exposure in hope of some sizable moves, and banks have been looking to boost staffing. OK,
really interesting times and a lot of interest in FX. But how does it compare with the return of carry trades in recent years, the blow-up in the yen? Just put it into historical context for us.
Yeah, you're right. Interest in FX did come back in recent years as central banks hiked rates aggressively after the pandemic. The industry had a really tough time during the zero and ultra-low interest rate period, because to make money in FX, those interest rate differentials are really crucial. So a lot of specialist FX funds did shut down. But because the central bank action that we saw after the pandemic was fairly synchronized, it meant that volatility was still very low. And for banks, volatility is really crucial in terms of profits, because there's just a lot more trading activity and people switching up positions. And we're already starting to see them benefit from more volatility since the US election, just looking at fourth quarter earnings results.
OK, so the uncertainty and that central bank divergence helping to keep up the action. Bloomberg's Alice Atkins across it all for us. We thank you. And coming up, it's going to be a busy week for European earnings as some of the biggest hitters report. We'll preview them next. So stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. If you're just joining us, it's 6:45 a.m. here in London, and it's going to be a busy week for banking and luxury earnings. We can get an idea of what to expect now with Bloomberg's Chloe Mallet all over it for us. And Chloe, I want to start with the banks, because so far in European earnings, of course, the theme, or one of them, has been M&A.
Yeah.
So when we hear from Commerzbank and UniCredit, what are you expecting in terms of this unfolding saga?
Yes, so UniCredit starts us off tomorrow with earnings, but obviously the focus is not necessarily on earnings. It's more about its capital position and the balance that it decides to strike between using that cash to kind of pursue deals. Obviously, we've got in mind Banco BPM and Commerzbank, or using that cash to fund shareholder returns. So that will be kind of the key theme tomorrow for UniCredit. Then if we wait a little bit, a couple of days later, it's going to be Commerzbank. And there the focus will also be on the M&A side and trying to convince shareholders that it can really be, that it can deliver value as a standalone entity. That is complicated by the fact that, there's an economic slowdown and recession in Germany, and then a lower interest rates as well. So that is really dragging down earnings and pushing up the cost of risk. So it's complicating this.
Yeah, in terms of central banks, of course, we've got this slower pace of rate cuts from the Bank of England. We've got UK banks reporting this week. How's that affected to feed into their earnings?
Yeah, so UK banks are expected. So we've got NatWest and Barclays this week, and then Lloyds next week. And the slower pace of rate cuts compared to the Eurozone is expected to provide a boost there, because that reduces margin pressure. For Barclays, there's also a boost from the investment bank, a good investment bank performance. So Barclays should have a good quarter. It's expected to be on revenue expectations and have be quite solid across the board. NatWest has a very kind of similar tailwind as well that's expected. So it should be a good quarter for the UK.
And then we have to discuss our favourite subject, luxury.
Yes.
Kering reporting on Tuesday. Interesting in light of the surprise departure of the Gucci creative director.
Yeah, absolutely. So Kering and Hermes later this week, they usually kind of sit at opposite ends of the performance spectrum, really, when it comes to luxury market, where Kering is usually a bit more vulnerable to lower demand. But it's expected to kind of start turning a corner, and this quarter should maybe be an indication of that. But as you said, we have to also keep in mind that the creative director did just depart. So for investors, it's a focus on is the flagship brand of Kering, Gucci, going to be able to kind of deliver on this strategy and this vision.
OK, our ever-fashionable Chloe Mallet, EMEA earnings specialist here at Bloomberg. We thank you very much as we look ahead to those earnings. Now, Live Golf is closing in on more places for its star golfers at the world's premier competitions. Jemana Basecci has been speaking with the new CEO, Scott O'Neill, as he attended Live's 2025 season opener over in Riyadh.
We have been for, of, and about growing the game of golf. And there are so many new and exciting leaders. If you look at Derek Sprague at PGA of America and Mark Darbin at the R&A, and I'm new at Live, and I know the PGA is looking for a new executive as well to work alongside Jay. And I think that provides an opportunity for us all to take a step back, appreciate where we are in this moment of time, and move forward. The fact that the leader of the free world, the President of the United States, thinks that golf is this important that he can engage makes us really happy and validates how important this game is. And I still believe it's one of life's great teachers, and just as important as we could possibly find today in bringing this game together. So any news that brings us closer to that, I think is really welcome news for all the golf fans around the world.
Have you spoken to the president directly yourself?
I have not, no. In a few weeks, we'll be in Miami playing at Doral, which is a Trump course, and I imagine he'll make an appearance there. But in these first 30 days, I've had the time of my life, getting to know these incredible stars like Brooks Koepka and Dustin Johnson and Bryson DeChambeau. We have the best players from around the world. That's been an experience. Getting ready for this incredible event season, kicking off in Riyadh, and getting our feet under us and planning for the future.
Now, I know you're not in position to give us the contours of the deal, but is it your expectation that if a deal does come to fruition, that it would allow for more coexistence between Live players and the PGA Tour? Is it your expectation that ultimately Live players could participate in the PGA Tour without being penalized?
You know, our focus right now is on making sure we take the best players in the world to the best locations in the world. It's a deal and a construct that we've all been working on for some time, and we're all focused on the same goals and objectives, and that is to grow this game, put as many of the greatest players on the biggest stages of the world. And while I'd love to walk chapter and verse into the deal, I will tell you that anything that's good for this game is good for Liv, and we're thrilled that there's progress being made.
Yeah. One recent development earlier this week, the U.S. Open became the first major to actually create an exemption for Liv golf players. Do you expect other majors to follow suit as well?
You know, very appreciative of Mike Wan and his leadership at the USGA. We heard today from Mark Darbin, who runs the RNA and the Open Championship, and they will be following suit. And at least the early conversations with Derek Sprague at the PGA of America are very positive as well. So it seems as if the headwinds are becoming tailwinds. There seems to be this incredible arc of momentum, and whether that's our deal with Fox in the U.S. or our deal with ITV in the UK, or all the incredible partners we've had. Madden is our title partner here, and Bahri just came on board as well, and Roshan. So we're starting to get momentum in terms of the entire business. So it's quite expected in terms of where we're heading.
Yeah.
So that was the Liv Golf CEO Scott O'Neill speaking to Jumana Basetchi from Riyadh. Staying with sports, Philadelphia Eagles fans are celebrating after their team won America's Super Bowl, beating the Kansas City Chiefs 40-22. President Trump was at the final, becoming the first sitting president to attend a Super Bowl in the event's 59-year history. We've got plenty more coming up on the programme, so do stay with us. This is Bloomberg.
We reduced our policy rate by 100 basis points through December, but the recent progress on inflation has been slow and a little uneven, and inflation remains elevated. There is also considerable uncertainty about the economic effects of proposals of new policies.
Federal Reserve Governor Adriana Kugler speaking there, echoing perhaps the message that we expect to hear from Chair Powell in his testimony later this week. The resilience in the US economy perhaps giving cover for the Fed to hold off on cutting rates as it digests Trump policies, particularly on tariffs. And of course, we've had this announcement that Trump's planning 25% tariffs on imports of steel and aluminium. And you can see here who that affects the most. The majority of US imports of steel coming from Canada, as you can see here. But if we flip over the board, in terms of Trump's view of Fed policy, in fact, he endorsed the last cut, but the Fed can't breathe a sigh of relief yet, because if we flip the board over again, you can see Musk's verdict, which is the Fed is absurdly overstaffed. So Powell staying on his toes. But if we flip over the board again, in the middle of Powell's testimony, we are going to get the latest read on US CPI. Here is a view of what we're expecting, but that's all we've got time for on Daybreak Europe this morning. The opening trade is coming up next. Anna, Guy and Critty will take you to the start of the cash session. That does it for Bloomberg Daybreak Europe. This is Bloomberg.